Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index fell to around 98.56 last week, its lowest level in 3 months, after the US Treasury expanded its bond buyback program to help contain long-term borrowing costs. The move could improve dollar liquidity and ease pressure in the Treasury market. Meanwhile, Fed minutes showed some policymakers remain open to raising rates later this year if inflation risks intensify. Ongoing tensions between the US and Iran are also keeping inflation concerns elevated. WTI crude rallied nearly 6% last week, trading above $86 a barrel as tensions between the US and Iran showed no signs of easing. Washington is preparing tougher measures aimed at further isolating Iran from international financial and commercial channels, adding to concerns over supply through the Strait of Hormuz. At the same time, Ukrainian attacks on Russian energy infrastructure have caused fuel shortages in some regions, adding further upward pressure to global oil prices. Gold climbed above $4,600 an ounce last week, heading for a third straight weekly gain as investors moved into safe haven assets amid volatility in bond and currency markets. Precious metals also surged after the US Treasury announced plans to significantly increase long-term debt buybacks, pushing Treasury yields and the dollar lower. Rising oil prices and renewed sanctions pressure on Iran are keeping inflation risks elevated, while strong investment demand and continued central bank buying, particularly from China, continue to support gold. The yen was little changed around 159 against the US dollar last week, following sharp swings earlier in the week. Japanese inflation accelerated for a second consecutive month, strengthening expectations that the Bank of Japan could raise rates again, potentially as early as September. The yen briefly strengthened after the US Treasury announced larger debt buybacks, but later gave back much of those gains. Longer-term, wide interest rate differentials, fiscal concerns, and elevated energy and import costs continue to weigh on the yen. The euro rose above 1.17 against the dollar, reaching a 3-month high as the greenback weakened following the US Treasury's decision to increase its bond buyback limits. The move could inject more dollar liquidity into financial markets and help reduce long-term US yields. At the same time, rising European natural gas prices are adding to inflation risks, particularly as Middle East supply concerns persist. Markets are therefore expecting the European Central Bank to maintain a relatively hawkish stance, with further rate increases still possible this year.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.